What's up, traders? Matt from the Trade Brigade here doing a technical analysis on ticker symbol JCS for communication systems. On the left-hand side, we have the daily time frame, and on the right-hand side, the 30-minute intraday time frame. Now, this one did seem some explosive movement on today's session, good volatility here to the upside and downside at times, and the main reason was that they announced the catalyst. There is going to be a special dividend here. You can see it's $3.50 per share that you own, so that's, pretty substantial. Now, one thing I would say, just in terms of dividends and how they work, generally, this price is going to get shaved right off of the stock price once that dividend is actually paid out. Now, unless there's enough, counter buying activity to push prices higher, then generally what you see is a move lower when a dividend is paid out, right? It doesn't always have to happen that way, but those are typically the mechanics of how these things unfold. So please keep that in mind if you're trying to stick around until the dividend. I would really be careful, just noting that if we scrunch the chart up from prior, not the best trade history. I mean, it's certainly not bad, don't get me wrong. It is moving higher, but most of these really significant pops have sold off and dropped afterward, and it's taken quite some time, right? If you were a buyer back here, to recoup your money in this move back here. So just think about that in terms of its trade history. Now, don't get me wrong. If you're long from down here for $5 or so, this is fantastic for you, right? So going forward, what are we going to watch out here? First thing has to be volume, right? If volume starts drying up and there's a lack of interest in this stock going forward, probably not something you want to get involved in. Otherwise, I would argue you're likely in for days like this, where it's just a slow grind higher. Maybe you get 20 cents, a couple cents out of the day, and not much more than that. So please keep an eye on volume down below. Next up, of course, is the glaring gap in the chart. Now, of course, whenever we're dealing with a gap, we just note that the low of the gap up, right, the 779, if we trade underneath that, the gap starts to fill with relative ease down there towards that $6.79 mark. So keep in mind, again, I'm not calling for this. I'm just saying that if we trade under 779, there is, a dollar's worth of movement to the downside with very little support underneath. The next thing we'll do is take a look at the intraday 30-minute data, see what's going on from a Fibonacci perspective. And before I do that, I want to just, of course, map out this clear area of resistance at 930 and also an area of support in here. It'd be very interesting if this coincides for the 38.2, but let's see what's going to happen here going in from the low of the move all the way on up to the high. And what you'll notice is it's off, right? So the 38.2 goes right through some of that structure. Ideally on this consolidation, it would have held inside above that 9, let's just call it 9 for whole dollar's sake. But as we know, structure is always more important than Fibonacci. So I would just stick with that 880 mark. And of course, the 61.8 though is kind of interestingly enough coinciding with the first little bounce high before the pullback and then kind of this pullback from in here. So I would note that as just a critical area. If we do start to break down underneath structure, that may provide some support there. So ideally, this continues and just does something like this. Consolidates up here well above that 880, and boom, we get a break up and over this high here to start targeting overhead levels. I would really pay attention to 10, nice round number. Also, if we scrunch this chart back up, we'll just note that, again, 10 was resistant from back in here, just shy, 990, and of course from in here, way up there at 1145. Again, not calling for that, but simply noting that that is where the structure is, and then zooming back in. If we take out that 880, again, maybe there's a chance we get a piece of support here at 850, so potentially something like this, and then bounce, but I would be skeptical, right? I wouldn't go long here as we start pulling back. I would really wait for a breakout on this one up and over that 930, and if we take out that 851, it's kind of sit on your hands, be neutral here, let this sort of dust settle, if you will, because again, as mentioned, if we take out that 779, about $1 to fall to fill the gap at 679. So not interested if we start taking out that 851 area. That kind of has to be the line in the sand, in my opinion. So those are my thoughts. Those are levels I'll be watching. Again, keep an eye on what happens with the dividend as well as volume. If volume dries up, again, it's not going to bode well for this trade. So if you enjoyed the video or learned anything new, certainly let me know down below in the comment section or by giving the video a thumbs up. Don't forget our main channel is linked in the description, and all of that being said, I wish you a green trading week.